Okay, another week, another update. Rental house versus high income ETFs. This is episode 12, I'll call it. So, this is the first episode of the last month. So, the end of October, this will be 12 months of this experiment. So, it'll be interesting to see how we end up at the end of the month. This past week, I did a lot of rebalancing. So, hence the title here, rebalancing, sold some QDTE, added more SPYI, QQQI, and MAGY. We'll talk more about that in a second here. And if you're new to this series of videos and watch me either make money or lose money or break even, this is for you. So if you could subscribe and you turn on notifications, everybody says that. I never do that. But anyhow, not financial advice. This is just me with an experiment and using margin. So some people consider that bad advice. I consider it fun. So do your own thing. I like to start each week out by seeing how the market's kind of doing overall. So this is the S&P 500, the SPY, and you can see we're on this upward trend all the way since April, May or so, and steadily going up. So I've been, not with this account, but another account, I've been selling covered calls along the way, just a little bit up here out of reach. And so about every few weeks, every 2, 3 weeks, I will roll the cover call and keep pushing it a little bit higher and make a few $100 a month on top of the S&P and the QQQ. Things I like to look at is that 20-day moving average and the Bollinger Band and see where things are going. I don't try to time the market as far as buying and selling, but when I enter into the market and buy some new things, I try to buy it when things are on a dip, and I keep an eye on the RSI. If things are overbought, I try not to buy at those times, but sometimes you just want to keep dollar cost averaging and keep putting money in during the ups and downs. I don't really use it a lot for timing. I just try to use it to make some smart decisions. So let's look at some balances here. I started out with 70,000. We're 89,700, almost 90,000 since November. And I'm using margin. I'm at 77,435. These are the ETFs I have. So let's start at the bottom. Just a couple things here. And we're at 2,000 of QDTE, 700 AIPI, 450 of MAGY, 300 of QQQI and SPYI, and 500 shares of GIAX. And we'll talk more about that in depth here in a second here, like as in right now. Let's start at the bottom here. I did some rebalancing this past week. I have mentioned in several videos in the past month or two how if I had to do over, I probably would not have bought so many shares of QDTE. I probably would have started out with QQQI or SPYI in my account and then added some higher paying weekly payers later. But that's not what I did. I bought a whole bunch of QDTE right off the bat. Some of these weekly payers weren't available when I started this, or they were really new. MAGY wasn't available at that point. And a year ago, QDTE was really on fire. So I don't regret anything I did. I just decided to do some rebalancing here. So what I did, I sold 700 shares of QDTE, just brought it down to even 2,000 shares. And then I bought 250 shares of MAGY. It's a weekly payer, pays on Mondays. And then I also bought 75 shares at QQQI, 75 SPYI. And then I realized that when I did the math, I still had some money left over. So the next day I bought another 50 shares of MAGY. It was also after they announced the distribution for Monday and the price had dipped down. And I put in a limit order to buy if it hit 56.30, and it did dip down to 56.30. So I ended up with 50 more shares there. Then I received my weekly distribution from QDTE, $559. So that was the action of last week. And here down here at the bottom, you can see where I keep track of everything I've done. So this is not everything because I'm starting to run out of space, but this is since beginning of the year approximately. So you see I sold the 700 shares and what I bought here the past couple of days. And this is where I keep track of the distributions and the margin interest that I pay. And these are the totals for each month. This is the running total of everything. So far for October, I've received two distributions, 559 from QDTE and 154 from MAGY. That actually doesn't pay out till Monday, but it popped up on my Robinhood account, so I know how much that's going to be. And I think the interest popped up too. That'd be $330 approximately. These are placeholders for what I will receive for the rest of the month. I need to double check that, make sure I got the dates pasted in there correctly. If you're interested to see what happened, let's say for the month of September up here that I have collapsed. Here's a screenshot of what happened in September. It ended up with 3,500 approximately in distributions after paying the interest on the margin. People ask me, why do you use margin? You're gonna lose your money. Why use a margin? That's to boost my returns. Here's the rate of return since November 1st, 2024. The ETFs that I have purchased. MEGY is not in this list because it's actually pretty new, but all these have been around since the beginning of November. I didn't buy all these right at the beginning. I didn't add GIAX till a little bit later. Also, SPYI and QQQI. I own those in other accounts, but not this particular account. What I'm trying to show here is if I would have just bought some ETFs and not used margin, this would have been the maximum return. If you look at QQQI, it's 18.54, PE is 14.4. So if I would have just bought QDTE and maybe AIPI and not use margin, I'd be sitting at about 15% so far. By using margin, I am able to boost that return, and I'm at 28% for this experiment. Again, why do I use margin? Because it almost doubles my overall rate of return. Yes, I do know if there's a drop in the market, because I'm using margin, my drop will be perhaps double. But if you ask 9 out of 10 people, is the market going to be higher in 2 years than what it is today? 9 out of 10 people probably tell you, yes, the market will be higher. And that's what I'm going off of. And this is my favorite spreadsheet that I use. Shows what I projected how things would be if in a perfect world. Starting November 1st, 2024, I got a bunch of cells that are collapsed and hidden because I was running out of room. But anyhow, on a weekly basis, I had expected this to grow by 0.75 of 1% each week. And if it would have, I'd be sitting at $100,000 right now. But it didn't grow at that rate each week. We had a few bad weeks there back in April. I think people remember that. So I'm actually sitting at almost 90,000. I'm not terribly behind, but I'm a little bit behind. My margin, I expect it to be at 75,000, almost 76,000. I'm sitting at 77,000, so a little bit higher. My total investment is 167,000, so that's counting the equity plus the margin used. So 167,137. The blue line represents the 1-year anniversary. I'm anxious to see how we ended up for the year. It looks like we'll end up over 30% for the year unless something happens in the next couple weeks. The green line represents the end of the calendar year. I'll start with a fresh spreadsheet at the beginning of next year. So if things would have went perfect, we would have ended up almost 50% for the year. So we'll see how close we get. This whole experiment is comparing that account with how things would have happened if I would have kept that rental house. So this whole experiment has to do with we sold a rental house and we put that money into this account and seeing if the ETF can outperform the house. And so this is how the house would have performed if I would have kept it. This is not calculating any extra expenses. The only expenses it's figuring is the monthly insurance and tax bill. The rent collected each month is $700. I get comments all the time like, 70,000 wouldn't be a down payment on a house in my area. If you wanted to take these numbers and double or triple them, you'd get the same results. So if your rental house is 210,000 or your rental building, you could triple it and say I started out with 210,000 and go that route. But yes, in rural Illinois, I'm 100 miles from Chicago. You probably couldn't buy this house for 70,000 now. It'd probably be 90,000. Things are really going up in this area, just like every area. In fact, what's happening here is catching up with where other areas already are. At the time I sold, this is what the prices were, and this is what it was. If things would have went perfect, I'd be sitting about $5,000 in my checking account. The equity probably would have grown by almost 4% for the year, which is $233 per month. So I'd be sitting at 72,796 in equity. So total equity and balance in the cash account would be about 78,000 almost, and that'd be where we would be sitting. So if you do a little bit of math, the ETF 89,702 I think we had, and then the house 77,836. So the ETF is up almost 12,000 for the year. Just a reminder, this is not financial advice, and we'll see you next week with another video.